Moon gang. I hope everyone was able to hopefully avoid the markets for the midday afternoon because it's a little bit of a bloodbath. Everything on my chart over here, red. It's a sea of red. What's green? Apple's up by 0.35%. Everything else is in the red. Oh man, it's painful. It's painful, but hey, these are the days. We had 3 nice days of green, and I guess this is just where we're at right now. It is part of the game. Hopefully you balanced out some of your portfolio. Maybe I saw some people on Twitter talking about some unusual whales based SPY puts, so maybe you made some money on that. But AMC and GME looking pretty similar to the kind of many equities across the entire market of things in the red. Dude, Constitution Dow is skyrocketing. I don't know. So with that protocol, what is the coin? I would have to look that up to see what coin that is with Constitution Dow. That's pretty awesome though. I still like Constitution Dow and everything that they've been doing. Hey, actually, as we're kicking off the stream, we're getting a little bit of a bounce right now. A little bit of green across the board. We'll take that. I'm curious, how many of you did I sell my NVIDIA contract? No, 3. It came very close to my risk point, my price risk point, but it ended up bouncing right off of it. So I'm very much hoping that the coin that I flipped earlier today was my savings grace. So let's see how this all plays out. But I'm curious how many of you are actually involved in Constitution Dow. I tracked the story. I have no involvement in it at all, but I'm just curious, out of the couple thousand people that are in here, how many of you are like, yeah, no, I like it. I'm in it. Let's rock this thing. What else do we have? Bitcoin going down. Yeah, it is a little bit right now. It's been heavy. We have actually a lot of cryptos taking a small dip right now. Let's be a little bit, I guess, realistic relative to what's going on and everything. And yeah, Bitcoin coming off of 57 off to 47.5, Ethereum coming off of 4,400 to 4,100. We have Loopring going off of $2.50, actually showing some green there in Loopring. And we have Avalanche coming off of 95 down to 84 right now, 84, 85. So everything's red. The overall market is red. Probably your most favorite individual equities are red, good chance of it. And then a lot of crypto is red. It's a red day. You're going to have these in the market. You're going to have other days that everything's green across the board. Red may be due to Evergrande's default. I don't think so at all. Evergrande, that situation is definitely maintained. The debt holders related to Evergrande, it's at first it was very worrisome to everything, but yes, Evergrande's defaulted, but we knew they were going to default for about the past 36 hours. That was like pretty much written in stone, and yet still yesterday we had a green day. What I think's going on right now for the overall markets is it ran for 3 days. Like we don't have to come up with some amazing explanation. It was a green day. We ran into resistance, and it's barely red right now. Same with the Qs. Green day. I mean, if you rewind to December 7th, that was the best day the Nasdaq 100 had since March of this year, and then it ran into resistance at 400, and now it's taking a breather off of it. Russell 2000, green day, taking a breather, going for the gap fill at 220. I don't think we have to, I think sometimes Occam's razor is right here. The simplest answer is probably the right one. It's just we had 3 green days, a considerable percentage move across many things, and now we're just taking a realistic health check. I'm not really seeing the evidence of Evergrande's situation permeating throughout the entire equities market and the entire crypto market. Doesn't make the most sense to me. A lot, especially Bitcoin, but a lot of crypto has been kind of just flat recently, and now it's just kind of giving up as the market is somewhat dragging it down. That's my opinion on all of this. I really don't buy that Evergrande is dragging it all. I think this is reality. You're not gonna have every day of being some absurd green day back to back to back. We had 3 green days in a row. And if a green day versus a red day is like roughly a 50% chance, so for day 4, that's 1 divided by 2 to the power of 4. So all of a sudden we're going 50%, 25% chance, 12.5% chance to a 6.25% chance. That was the chance if all prices are normally distributed of today being across the board green. It was a 6.25% chance. So I think sometimes we just have to be like a little bit more realistic, and this is a good thing in terms of like having your mindset right, because then hopefully you're not having that absurd negative emotional response to understand that like to have 3 green days in a row, like, and 3 days ago that was like a very good one. To have 3 green days in a row, that's not the most normal thing. So like I don't know, I don't think we should be like absurdly surprised that day 4 is not also a green day. Not at all. So with it, let's just figure out what's going on. The way that red days don't last forever, a streak of red days don't last forever, a streak of green days don't last forever. Calm, cool, collected. Have your trading plan. This is why I try to continually preach, what is your plan? You don't want to be caught like a deer in the headlights, not knowing what to go on when you have circumstances like this, when it's going up or when it's going sideways and everyone's just bored. Everyone should have a plan. Everyone should have a plan. Ooga booga, what's going on? Atomic Jack. 3 green days equals a 5% rise, and 1 day equals minus 10%. I'm not sure what equity you're referring to, so I don't know how to check even that, Kevin. 3 green days equals up 5%, and I don't know what equity. You're just giving me percentages, but I don't know the equity. My problem is that 3 green days were up 1 to 2%, but the single red day is 10 to 20%. But once again, like, which one are you referring to? Like right there, that just sounds like, what equity are you checking in on? I mean, that's not true for the overall market. In the past 3 days, the S&P 500 has gone, or -1 off of that, from the close to the open, up 3.55, and then in the past day, we're currently down 0.5. In general, like you can't generalize it like that, because these are the actual numbers right here. The Qs went up 4.3%, came down 1.3, and then the Russell ended up going up how much? 5%, and then ended up coming down 1.92. So that's the overall market. Overall, I think so that's, if your portfolio roughly has exposure to the overall market, like, you're still going to be in the green. Even AMC still is like net green. You're up 15, down 8. So it doesn't even hold true for AMC. What about GME? GME is a bit different because of the earnings. Like, GME is clearly down because it's getting hit pretty hard off the earnings announcement. So this is, I would say, a different driver, because we have abnormal volume today of people, I guess, paper handing out of GME. But yes, the market is under pressure, and I'm not trying to say to like completely ignore it, but I'm saying sometimes that's important, of why we say when in doubt, zoom out. You have to look at the overall picture of what's going on. Do you mind checking CDTX unusual whales for Jan 22 options data? It doesn't really work like that, Eric. Like, I can't I don't think I could select a particular date. I mean, I could look it up and just show you what's going on, but I don't know of a way. Yeah, so it's bullish premium for sure, but not crazy stuff going on. I don't think I could pick particularly Jan 22 on this one. I don't know if it like kind of works in that mechanism. But bullish today. Can you give your thoughts, support Vortex data on LGVN? We talked about it this morning, but wow, it's been red after like everything else. My thoughts on it are, like I said, if it gets that price action, that breakout, I think it can really get cooking. But you need to see that first. I wouldn't arbitrarily get in before I see that. And I would hope that it can hold the support at 17.5. That's what I would be checking. Someone just said Lucid. Wow. Whoa. Lucid did get knocked by 15%. Wow. Lucid. How much is Tesla down? Tesla's down by 5. Rivian's down by 6. Apple now just went from green to red. Nvidia's down by 4. Everything's red. Olympus Dow update. You know, I have an update for you. Hang on. I could tell you exactly how my Olympus Dow is going. Hang on 1 second. Let me just bring up the numbers. I was trying to figure out, like, I was going through Etherscan and phantoms and avalanches. What's that? Snowfall or snow scanner or whatever it is. Let me double check this for you. On thus far, a day and a half involved with Olympus Dow, and I am down $100, which is also equivalent to 5%. I am down $100, which is equivalent to 5%. So about 36 hours involved in Olympus Dow, and I am down on it, unfortunately. But I guess that's just part of the game. That's just how life goes sometimes. But when I was thinking more about it, it takes time. Like, this isn't one of those like one day get rich type of things. Like, you're supposed to be in it and staking it for a while. So I don't know if I like really expected anything this early on. I mean, obviously I would like to go up, but when it's fighting the headwinds of the equities market and the crypto market, it's down 5%. I don't know. I guess it could be better. It could be worse. Could be better. Could be worse. Out of the other ones I did, and I'm going to make a video on these like individually and how to set it up. Overall, I am currently down across all of them. I did 4 separate ones. Actually, yeah, 4 separate ones. I'm currently down $240 overall. $240. So that would roughly be what? I'm down 2%. So for being involved in these DAOs, my first 1 day update for all of you, my first 36-hour update for all of you is down 2%. It is what it is. Let's see how this all plays out. What it is I'm down on 4 of them. I'm down on 3, and I'm very much up on 1. So the one I'm up on is kind of like undoing all the losses from the first 3, which is, I don't know. I think if you're doing this, you have to be prepared to be in it for like half a month or a full month. Like, I don't think being this quick is really how this game is good. I don't know. I don't think it's supposed to be that quick. What's up, Mark? What caused the sell-off today? I think it's actually just a correction off of the previous 3 days that we had. Hey, Matt, what do you think is the best single source for stock news in order to stay up to date with potential negative catalysts, Fed rates, COVID? A single one? I mean, if you're following the right accounts, Twitter, but in terms of like aggregated news, I love Benzinga. This is so nice. I put in all the tickers that I care about and anything that's tagged with these stories. And if you put in the SPY, IWM, and Qs, you're going to get all the government stuff as well. This is good stuff. See right here, U.S. indices are trading lower as stocks pull back following the strength in recent sessions. Fed says household debt grew to 6.2% annualized rate in Q3 versus 7.8% in Q2. What other overall market ones? 10 U.S. Senate Republicans vote in favor of advancing debt limit procedure, bolstering chances of passage. So that's some actual good news there. Legislation creating fast track to raise U.S. debt limit wins enough votes in Senate to pass. So there we go. Some positive news there. Senate votes 64-36 to clear way for the passage of the bill, setting fast track procedure for debt limit increase. What else do we have? Do people really consult horoscopes for buying stocks? You might be surprised. Well, now I'm intrigued. Now I'm intrigued. I think we should all. Some of us flip coins on a stream. Others of us consult our horoscope. Various things that are going to be going on there. All right. Man, this market is red. Not fun, not fun, not fun. What's green? I guess Apple's been fighting green. It's kind of at its own thing there. Oh, I did want to share this quick little story with you that I found to be interesting. JP Morgan offers hedge funds a way to dodge meme stock shocks. Around 30 institutional clients are testing the screening tool. Retail investors have increasing sway in stock markets. JP Morgan Chase & Co. is testing a new research product to guard big ticket clients from losses linked to the meme stock phenomenon that has captivated Wall Street this year. The screening tool is a data set on U.S. retail investor trends sold to institutional clients. It provides predicted retail flows, significant buy or sell signals on single stocks, negative or positive sentiment based on the bank's internal data, and scouring of social media forums such as Reddit or Twitter. Data shared with clients include the size of retail flows, the most discussed stocks on social media companies that are likely to face a retail squeeze, when small investors rush to a stock that hedge funds are betting against. Just a quick definition there. You know, out of all of this, has the ape movement, has the retail movement, has the dumb money movement forever changed Wall Street? Undoubtedly. There's no doubt in my mind that this entire saga has put the entire, I guess, history of Wall Street on a new trajectory. And we're seeing it in many different ways, such as this of they are literally trying to provide value to their clients, institutional clients, because these clients are potentially so worried about retail traders. Obviously, this is a very good article. I'd recommend checking it all out. You can find it on Bloomberg. Here's the title. But overall, the fact that they're just like, they're worried about it, so they're attempting, I guess, for lack of a better word, to protect their clients by giving them these options. And it's basically just a big social media rundown of what is social media talking about, and that's the product that they're selling. So really, I feel like JP Morgan is probably just hiring some Gen Z kids saying, hey, what's going on social media? And then they're there like on their phone, texting their friend, chewing their bubble gum, like, I don't know. They're talking about AMC today. That goes in the report. Some guy who's been there for like 3 decades, he's like, okay, we'll have to put this in the report. But overall, it's an interesting social sentiment breakdown. And we're seeing more things like that. Like even on our side, we have things, what was it, like swaggy stocks. And then people are on like StockTwit and FinTwit. And you can see the trending ones of what are people talking about. That's obviously valuable data, because when all retail decides to get on one side of a bet coming together, that actually represents probably one of the world's biggest hedge funds if all retail is betting in a similar manner. Hence why you're seeing JP make moves like this. Overall, I just wanted to share that with you. I thought it was kind of an interesting story. Definitely, I don't know, I found it particularly intriguing to kind of see what they are all up to, not up to. They just watched Matt's stream. Oh, that's funny. I like it. Isn't that more advantageous to meme stocks since they pour money in for a quick buck? Well, they could use it however they want. If they want to, maybe they're shorting something and they get scared and they can cover, or if they want to join in with retail. I mean, obviously they can utilize the data however they want. It's just more of for them to know it. And I don't know if they would, I'm sure some of the clients would bet with you, other of the clients would bet against you, and other of the clients would use that as data of, oh, we're just not going to touch these stocks because we don't have models that like accurately represent them. So I think you would see it being used in all three ways: with, against, and also completely avoid. Unicorn ripping through the UK, work from home Monday, top soccer game called off tonight as 8 first choice players tested. Oh, positive. Hodl tight. Shout out Chris. So maybe some new fears resurfacing related to the Rona. Hey, Matt, what do you think the best... Okay, we did over that. That's a great question, Ariel. What else do we have? Gen Z, that Mac kid is thick. Shout out, shout out, shout out. Shout out, shout out, shout out. Oh, okay. You know what I want to do with all of you? As these things are kind of scary red. Scary red. I don't know what's happening there. Hang on 1 second. Let me just double check something. Let me double check. What else do we have? What else do we have? Oh, okay. That's actually not really much of anything. Not much of anything, unfortunately. Okay, moving on. Let me actually get some water. Let me clear this. These days are just not fun. They're red. Everyone's in a bad mood. Eight videos to save the market. We could do that. We could do some 8 videos, but let me do my quick teaching session with all of you. All right. Let's pull up the SPY here. All right. Welcome back to Teaching Technicals with me, the dumbest of them all, Mr. Teacher, Professor Mateo. And today we will be talking about on-balance volume, also known as OBV, and I think that's important for a lot of us to know because it is a pretty popular indicator. So like many of the other ones we've discussed, RSI, MACD, it's another momentum indicator, but instead of being a lagging indicator, this one's actually considered to be a leading indicator. That comes with its own host of pros and cons, and I'll discuss that in a minute. But overall, OBV, on balance volume, another indicator, momentum indicator. This one is a leading indicator. This one, you can find it on TradingView. You could probably find it on whatever charting software you're on. Once again, just click OBV and you're going to get this to come up. You're going to get this line, and your first question might be, what in the world does this line possibly mean? And I don't want anyone to really get bogged down in the magnitude. So a lot of the times, if we're looking at things like RSI, you're going to care about the value. Where in 0 to 100 is it? Now with OBV, you don't really care about this number at all. You care more about the trend of the line. So how is this line calculated for all of my math nerds out there? Well, you arbitrarily start at some point, and whatever time frame you're on, if you're going to start at 0. Your base value is going to be 0, and whatever time frame you're on, you look at every bar. So if the bar is green, if the close is higher than the previous close, you would add the volume. So let's say you have a green bar and there was 100,000 shares traded, it would be now plus 100,000. Let's say the very next bar, for whatever time frame you're on, is another green bar, and it's another 100,000. So now it's 100,000 plus 100,000, 200,000. Now let's say it's actually a red bar. Now in this case, now the third close is below the second close, which means you now have a red bar. You would actually subtract that volume. Let's say that volume is 50,000. So you have 100,000 plus 100,000 minus 50,000. So it's always a running total. Whenever you have a green bar, whatever volume is associated with that volume, you add it. And if you have a red bar, the close is below the previous close, you would subtract it from whatever the running total cumulative value is. That's how OBV is calculated, on balance volume. So now that you have that, you kind of see that when it goes up, more green bars, you're adding the volume. When you have the red bars, you are subtracting the volume. What's kind of interesting here is it doesn't take the extreme nature of the bar into account. So for example, you can have a little red bar with a massive volume, or you can have a massive red bar with a small volume, and you're only just changing the volume. It's not taking into account the range of the bar. And then this leads into a scenario where you can kind of utilize it in pretty unique ways. So first of all, I would say that there's 2 main ways you can really utilize OBV. First of all, you can use it for trend confirmation. So for example, the S&P 500 back in September hit at that point a new all-time high, and it sold off. And then we saw kind of a point of, okay, is the bearish trend over right between October 7th and October 13th? In here, you might be waiting, be like, okay, is this a fake out breakout? What's going on? But at a certain sense, around here on October 15th, when it started to go, you can see that you got a nice trend confirmation. Not only was it going up, but the volume was in agreement with the actual trend. The volume was pouring in. And in a certain sense, if you really boil it down, it's telling you that the smart money is also betting on it. The big players, the people with the money who increase the volume, balloon the volume when they like a certain trade. As you see the volume go up and up and up, that's telling you that the smart money is also betting on it. So you can use it as a trend confirmation. That's the first one. The second one I would really bring up here is when you have a little bit of a disagreement. So you can kind of see it here, the current all-time high on November 22nd. Well, if you compare that to the previous all-time high when we were there, let me just mark this for you. Well, as you can see, the volume didn't really increase. So similar to whatever it is, RSI, MACD, stochastics, there's so many things where you see this bearish divergence. So we got a new high, but people weren't as eager to buy it. So you're seeing the decrease in volume there. It had a hard time struggling. Now, this particular example is not the best. The price did go higher, but people weren't enthusiastic. And then eventually we saw the sell-off. But I think I found a better example for you. Let's check out Lucid. So right here, this entire time it was pushing. We have this nice trend. But as it was kind of consolidating and we saw it was trying to get going, but the volume just never was there. It's telling us that the big players, the people who can move markets with the serious money, you're seeing a bit of that divergence. And once again, RSI, MACD, it's all going to be called bearish divergence when the price goes higher, but whatever that indicator is you're using doesn't go higher, that's bearish divergence. You can actually also see it the other way. If something continues to go lower, but once again, the OBV is not making a new low, and you can apply this to whatever time frames you want. I've been using daily candlesticks. That would just be the flip example of where you have bullish divergence of like, okay, something's going on here, but the volume, it's starting to dry up and the volume is not dropping as much with the price. So the bears are running out of steam and maybe you actually have some bulls finally starting to step in. So OBV, trend confirmation, and also you can look for a form of bearish or even bullish divergence. Both of those would be applicable in this scenario. This OBV, on balance volume, is a leading indicator. Similar to many of the other indicators we discussed. Do not use it by itself. This particular one, I would use it in environments where is the trend confirmed? Is there about to be a trend reversal? That's where I would use it, but I would also want to pair it up with maybe a lagging indicator to kind of, no pun intended, balance it out to make sure I'm getting confirmation. So maybe I want to see something in the MACD and that I'm like, okay, I think the trend's confirming. And then I wait for the OBV to say, yeah, okay, we can confirm this trend. So once again, this is another tool that I like to pair up with other tools and kind of use them all individually as a filter. And if it passes all filters, you might have a very interesting trade or investment in front of you. But overall, this is OBV, on balance volume. Obviously, let me know if you have any questions. Feel free to post them. Any chance you have got into purchasing property on Metaverse? If so, do you think you would suggest to purchase on a dark horse? I have not. So I have some people who've been like talking to me about it and people saying you got to get into it. And I think there's clearly opportunity there without a doubt. It's just the question of I need to study it more. There's so many things going on. Oh, talking about OBV, look at, so you got this trend confirmation, and granted, NVIDIA didn't make a new low, but look how much the volume changed. So it was kind of saying that this was actually a weak sell-off here at 305. The volume was still pretty strong. A notable discrepancy between the price action that came down almost to the same value, but the OVB was considerably higher. So that's a little 5-minute breakdown for you there. Clip it. I missed it. Oh yeah, all of these get clipped and put on the Kohrs Lite, just so you know. All of them. Oops. Sorry for that. My apologies. Am I good at derivatives? I guess it depends on what do you mean, like good at derivatives. Some people refer to me as the best Tesla trader on this side of the Mississippi. So if you count that as your, like, if you have that accolade, are you good at derivatives? I don't know. I'll let that be up to you. Can you try to talk about being able to play both sides of the market? Super unhealthy to only bet on upswings. I don't know if I would say that's unhealthy. Not many people want to bet on downswings. You should be able to identify potential upswings and downswings. And if you don't want to play it, well, you know not to do a trade at that moment in time, and you just wait for the next opportunity. So only playing upswings. I mean, I know people, there are many individual people, there are many hedge funds that are long only. They don't go short, but you still want to identify situations where it might be good to go short, so you know not to go long, basically. But this is why I do technicals literally every day to identify that. That's why I point out bearish divergence. So you can do whatever you want with that information. If you want to go short, if you want to buy puts, great. If you are seeing it and it just tells you to not go long and you just want to wait for the next long signal, well, that's completely fine. Hey, Matt, hope you're doing well. Thoughts on Rumble SPAC CFVI? So I'm a fan of Rumble. I'm currently streaming on Rumble. Shout out to the Rumble fam. I'm a fan of it. I think the way big tech is trending, I think Rumble is here to stay. I truly think there's an appetite for a less censored platform, a less censored social media platform. The amount of people that are getting sick and tired of getting censored on whatever platform you can possibly think of, the number is mounting, and then that's opening up an opportunity for platforms such as Rumble. Now, I haven't read the prospectus. I haven't read like what's going on. I haven't read, like, I don't know their number and their revenue and all that. I'm just saying, as a content creator and as a content consumer, I'm pretty bullish on Rumble. I would have to look into the specific numbers, but I need to look into it. Okay, an ACHR. What is ACHR? ACHR, Archer Aviation. I believe this is the one where they have like kind of those like mini single vertical takeoff and landing, kind of like helicopters, but not really. It's sold, but now it's finally showing strength. You got that break above $7. I would say maybe the next stop is 777. And I'm just targeting this support resistance and seeing what it does there. But I kind of like this cup and handle scenario. Can I look at ARDX? ARDX also looking good. So this is a biotech play. I'd be interested in what they are or aren't doing. Obviously, they got absolutely hammered in July. Something had to happen there. Maybe they didn't get FDA approval. Maybe a test went bad for them. Maybe they got sued, lost a drug. I don't know what it was. You're going to want to look that up before ever buying this. But as of now, I mean, you're basing off of 130, and I like the breakout of 150. Maybe it could go up to 190 with your risk at 130. The one thing I do want to say about OBV that I should have said in the whole OBV talk, that it escaped my mind, is sometimes when you have a fundamental event, you get an overreaction, because sometimes fundamental events, you see a massive spike in volume, and that can actually distort the OBV. That's very, very important. A little caveat right there is a fundamental event, a big announcement, you can see an inflow of volume. And then because you only care about the volume, not the size of the bar itself, the range from the high to low or the open and close, you can see a distortion in OBV because it has to either add or subtract that value, even if it's just a little red, a little green. So sometimes with a special influx of volume, it does distort the OBV technical indicator. CNTX. Please look at CNTX. It looks like it's going to run again. It might, but I don't like trading stocks that are this new. It's just not enough support resistance lines for me. If you're in it, I hope you crush it. It had a gap fill today. That's awesome. It had a nice day, up 32%. Another therapeutics play. You might want to look into what's going on. But it's not particularly for me. But if it's for you, I still hope you crush it. Archer is an electric flight type of vehicle that could fit within a charging network. They actually had a video back in May or April. So I remember when they first went live, a lot of people were asking about it. And I remember like they looked pretty cool. Like I thought their electric vehicle, their electric flying vehicle looked pretty cool. You think NVIDIA will gap back down to 300? I don't know about a gap. It might just go to 300, but a gap back down. That's like when you're asking about a gap, that's the jump between two different time frames. Like one trading day and the next trading day is most of the time where they occur. So you're asking me if it's going to like one day close and then the next day gap even lower. That, I mean, gaps are like more predictable when you know there's an announcement. For example, like GameStop's earnings announcement at first created a gap. So that's where I'm like, oh, okay, gaps, but even there, like, is it going to gap up or down? Well, it depends if the news was bullish or bearish. But an arbitrary day like this, I don't know, maybe there's going to be an announcement. Maybe there's not going to be an announcement. I think that would be very difficult to predict. Very difficult to predict. All right, I think we are up to date there. All right. You got to have lives with Meet Kevin. Oh, I've done some content with Meet Kevin. I like Meet Kevin. We're buds. I would definitely do some lives with him, but we've already done some, I don't know, I think we've done like 4 pieces of content together. All right, what else do we have? Do you want the AMC Ortex, please? Yeah, but this is not... Was it shorted today? Yeah, but there was also a net return today. The short interest actually slightly dropped 19%. Today's result, stocks can go down without shorting. And I think a lot of you probably already know that. But to some of the newer people in here, I don't want you to think that it's shorting that pushes a stock down. Shorting can push a stock down, but it's not the only thing. Really, shorting is a type of selling, and selling is what pushes the stock down. Selling, in over-aggression in selling. When sellers are more aggressive than buyers, the price goes down. When buyers are more aggressive than sellers, price goes up. Price is nothing more than the equilibrium between supply and demand. Buyers, whenever you buy, there is a seller. Whenever you sell, there is a buyer. All buyers have sellers. All sellers have buyer. There's always a one-to-one matching. What's different in how a price changes is based on what price are the willing parties, the buyer and the seller, agreeing on. Are they agreeing on a higher and higher price, as in the buyers are aggressive, or are they agreeing on a lower and lower price as the sellers are aggressive? There are various types of selling. You could be buying and or selling to create a position. You could be buying and or selling to get out of a position. You could play it either way, but really what it is at its most inherent supply demand level is supply, demand. The equilibrium between the two is exactly the price of an asset, of a crypto, of an option, of a future, whatever. Paintings, that's all it is. Prices, everything in this world is supply and demand. Everything in the entire world. Anything that's involved in a market, that's where price is. What do you think about an AMC gap around 1670, 1770 seen on the daily candles between the 1st and 2nd of June? 1st and 2nd of June. Over here? Yeah. This is a gap, and like similar to a gap that we had from... Oh, wait. That gap's already filled. Like, this was actually already filled on July 15th. So once it's filled... the gap fill play is like kind of over. So I think there's still, is there a gap above us? No, not right now. But I guess I have no special thoughts about it because the gap is already filled. Like once it's filled, that the gap fill play is kind of over. Thoughts on ACTV? ACVT, sorry. ACVT? Do you mean AC... TV, AC something. Yeah, I think leaders, shares, activists, leaders in investment. I don't know what this one's tracking. Its chart is super funky though. Shoots up, flatline, shoots up. Now trading normally, but kind of. Ryan, if this is what you mean, a leadership shares activist leaders. I don't even really know what this is tracking. Someone said Lucid looks like a snack. Lucid, the dip buy opportunity on Lucid is closer to 34. It might not get there. Obviously, there is also support at 36, but 34 and then again at 28. AVTC. Nope. AVCT. We're seeing lots of options. This is just like a random runner on the day up 85% with a super ugly chart. If you're not already in it, I wouldn't chase it. This like just reminds me of random penny stock days, like when you're just chasing runners, and I don't think that's like a winning methodology for the stock market. The gap at 17. Dennis, hang on. I'm trying to wait. Dennis, did you? Oh, okay. The first person who said it was Lisa. AMC. The gap at 17. Oh, okay. You mean this one? So yeah, this is a different time frame. So yes, this was a gap. Hang on, let me try to hide this. This is a gap. So basically from one day to the next day, there's no body or wick overlap. So here is a gap from the high of June 1st to the low of June 2nd. There is then another gap. Is there technically a gap right here? What is this high? 1667, and then the low is 1726. So between May 25th and 26th, yes, this like is defined as a gap. That is a gap. It's basically the high of one day does not in any way like numerically overlap with the low of the other day. So either the first day low with the next day high, or the first day high with the next day low. When there's no numerical overlap, that creates a gap. You can see gaps on whatever time frame. Gaps are most commonly seen on the daily time frame just because it involves the market closing and opening back up, but it doesn't necessarily have to be in that time frame. This gap, yes, I'm confirming it is a gap, and I still believe that just talking about all markets, yes, eventually gaps are filled, but with it, there's no rule of time. It could be filled the next day, the next week, the next month, the next year, the next decade. It just, there is a statistical advantage to playing a gap fill for sure, but they don't have to be filled in. Like there's not a time, like I guess with that of like, you can break that down of like gaps are filled. Most of the gaps on the S&P 500 are filled like in time, whatever. Those stats like are available, but I'm not aware of those particular stats for AMC. Some Twitchers are asking when we will get to see the new Webull 3.0 Vanguard edition. We can make that happen. Twitch fam, we could definitely make that happen. We can definitely make that happen. Balloon tower defense. I'm not gonna lie, sometimes I still play it just to relax and unwind myself. Shout out meme maker, shout out the red guy. What's going on? I migrated to Rumble after YouTube fell over too often. Rumble's great. Shout out Ace. Shout out Ace. Oh, I'm going to ask if one person can come over to Rumble. Just one, because right now we have 68 watching on Rumble. So sort it amongst yourselves, but we do need one person who is willing to hop over to Rumble at this moment in time. Okay, there we go. We're good. We're at 69. So whoever did it, we appreciate it, but we don't need anyone else right now. You're good. But out of all the people on Rumble, no one's allowed to leave. We're good. We're good. We're good. Leave it there. No one join. No one leave. We're good. We got the number. I appreciate it. Very kind of all of you. All right. So we took care of that. We took care of exactly what we need to take care of. Titan Ape Coin is giving BUSD to all apes. Mark, thoughts on ARR as a dividend play? I don't know what ARR's dividend is off of the top of my head. What is this? It's a REIT. So yeah, REITs usually have pretty good ones. It's actually kind of had some resistance right now. I wonder if this is going to get going. Its technicals I find a little bit concerning. Lower highs, lower lows. I wonder if it's going to finally bounce off of this. Would love to see it get above 1060, but I don't know its dividend percentage. I'm not saying it's good or bad, but just so you know, like the ones I do know about, I'm pretty biased towards Microsoft and Microsoft's dividend. Microsoft, in my opinion, is a great growth stock. It has a pretty solid dividend, not the best, but not the worst. Microsoft is a stock. If someone's listening right now and they're like, bro, Matt, I need a stock that I can buy and just freaking forget about and just come back in like a decade or two. I have many of those, but I think Microsoft's a very good one. What do you think on SHIB? Good to get in or no? I'm in SHIB. Do I think it's the best opportunity in the entire market? No, definitely not. It comes with an extreme amount of risk, but also high risk has high reward. So it's really how you're defining good. I mean, good to you might not be good to someone else. We have different risk profiles. Some people like money that is as close to guaranteed as possible. So that's typically a smaller payout. And other people are more than happy to YOLO. And they're like, hey, I don't care if I lose it, but if I hit, I want to hit big. So there's no like cohesive definition of good. Do I need to have this? Whoa. We're going mobile. We're bringing the show international. Mr. Worldwide. Oh, look at that. Look at that. Oh, this is nice. I'm so mobile now. I'm freeing. Why have I been doing this for 12 months and I just realized that I could be mobile now? That's amazing. It took me 12 months, 11 months to figure this out. And here we are, as mobile as could be. Matt answered Justin's question. What's Justin's question? I would love to answer it. What do I think about the possible head and shoulders on BTC weekly? BTC weekly. BTC weekly. I don't see a head and shoulders. We would have to see a whole nother shoulder first. I see a shoulder, I see a head, but I don't even see the start. Like, it seems like we're still forming the head. So like we would have to see a whole nother shoulder, I guess, for me to fairly commentate on that. Mobile Matt has some serious potential. He never answered my question and I paid. JB? Well, also just, folks, I'm not like I still have some like options here, folks. Like everyone understands that. But JB, I would love to answer. I just don't see it. Oh, here. Can GME AMC still moon if and when the market crashes? Yes. Could it? For sure. Are the odds of that good? In my opinion, no. No. I think if the market goes down, you're going to see some of the whales who are in AMC and GME getting out of AMC and GME, and I think that could cause some problems. Now, it depends. Are those whales lending their shares out, and then they're going to do a share, like they're going to get their broker to recall it, forcing shorts to cover? That's also a possibility. It comes down to the whales, and are they or aren't they loaning? It's going to become a messy scenario. In my humble opinion, I think a market sell-off would be damaging to AMC and GME. And my reasoning for that is AMC and GME are somewhat related, and AMC seems to be pegged to the Russell 2000. A lot of the intraday movement is matching up between AMC and GME, or excuse me, AMC and IWM, the Russell 2000. So I don't see why it would track it, but then all of a sudden, if it's a mega sell-off, start to do the opposite. The one caveat in which I see it would be if whales decide to get out and first they recall their shares and then the shorts have to cover. But then it comes down to how many were loaned out. Because in this scenario, they're going to be recalling the legal, legitimate ones, and then you're just talking about the short interest that we actually know about. So it becomes a whole complex scenario, but I think the odds of a sell-off leading to a MOAS are slim. I'm not going to say they're none, but they're slim. All right, we did that. We talked about LGVN. We did that. Time to buy, broski. Merry Christmas. Shout out Cody. Only one who gets excited on red days. I love this lower price. My favorite stock and company with the brightest future. GameStop. Buy, hold, repeat. Shout out L4 Custom Fabrication. JB, thank you, Space Ducks to the Moon. Happy to, JB. That was a good question. No, it was like legitimately a good question. Do you like Linux operating systems? I think Linux operating systems are more secure than Windows. They probably are, but that doesn't mean I like them. I think sometimes they're like a pain in the ass to use. Matt, honestly, you think the whole thing's going to work out? It depends on how you consider it to work out. Folks, anyone that tells you AMC or GME is going to do this, they are lying to your face. I don't know what AMC or GME is going to do. I put my money in it. Like I'm not putting my money in plays that I think are going to lose. So if you define that as working out, I don't know. Future still has to play itself out. Do I think it's going to work out if you're defining it as, are the apes going to be successful in fixing certain aspects of the market? Yes, I do. I think our voice is too loud. I think we have too much traction for this to just go away. I think the calendar year of 2022, you're going to see a lot of regulations that are kind of rewritten, that get rid of some of the loopholes and things that the big Wall Street elites take advantage of. And to me, that's I guess what I'm particularly passionate about. If you're in AMC and GME exclusively for the hope of money, okay, like I don't think there's anything wrong with that, and I want you to be successful, almost at a certain sense in a selfish way, because that also means that I make money, and yeah, that's why you're involved in the market, is to make money. But then I feel like that certain subgroup of people also act as you if you can't do any other things. If you don't care about market manipulation, if that's like not the hill you're fighting or the battle you're fighting, the hill you're going to die on, if you're here to exclusively make money, okay, AMC and GME, yeah, I think you can make money, but I also think you can make money in many aspects of the market right now. What's unique to me about AMC and GME is not only the opportunity to make money, but symbolically what they seem to represent. And that's a whole nother thing, because I don't think a particular equity should be representing the fight for market fairness. I think if you're an ape, you're fighting for market fairness. And if you happen to care about AMC and GME, okay, that's also cool. But I guess, I don't know, as this is going on and my eyes are being opened and I'm starting to comprehend some of the things that are truly happening in like the back rooms in Wall Street, the quote unquote back rooms, that's what I'm passionate about. Do I want to make money along the way? Of course I want to make money. I'm not some Mother Teresa figure who doesn't care about money. Yeah, I want money. I want to buy Cheez-Its. I want to buy sangria. I want to buy a new Corolla. Yeah, I want all of that stuff. So I'm not saying that I'm somehow against money with this massive like anti-financial altruistic view. No, I want to make money, but I also want to highlight to as many people as I can the bullshit that happens in the market day in and day out. And hopefully we can actually get some sort of cohesive voice together and like use a megaphone and get that in front of the right regulators and politicians. Can you explain OBV between price and volume on GoGo? So basically what this is saying is there was a massive amount of volume on this day. So you had to add it to the total volume. And then if you have a little bit of a red day, you have to subtract that volume. But so right here, these moves are in the fact that it's not going anywhere. This tells you that they're super, super low volume moves. Like all of these, like ever since October, low volume, it's barely going up. It's barely going down because there's not much volume associated with these trading days. And then this is also a good example of how one crazy day can really distort OBV. Did you increase your AVAX position today? I did not increase it. I just bought yesterday. So I'm going to be a little bit more patient, but I like Avalanche actually quite a bit. I actually bought a decent amount, and then I used some of it to start doing these other crypto things that I've been lightly alluding to. Someone just said, holy Lucid. Whoa, Lucid's getting crushed. Holy guacamole, Batman. Matt Kohrs, you think Citadel is using those Chinese bonds against us, and with Evergrande defaults, they won't have ammo against us? Is this theory plausible? No, because that's two different entities. The bonds involved with the bonds would be Citadel, the hedge fund, and with us, we're commonly referring to Citadel, the market maker. So I don't think there would be like an overlap really there in terms of like their capital to quote unquote use against us. I think you're talking about two distinct books. What if, Matt, if I was long on Lucid like months, should I have an exit plan if I plan to hold for the long term? If you're holding for the long term, that kind of is your exit plan. You're planning on holding most likely for multiple years. So for you, it's probably easy to buy and literally forget. Hey, Matt, have you seen the Reddit thread saying 43% of retail shares are held on Webull? I haven't. That's kind of interesting to me. 43%. Wow. I can't confirm or deny that, but if that's true, that's kind of nuts. And it's a good reason to get your butt over to public. It's pinned to the top of chat. It's for U.S. residents, free to sign up. You get up to $70 in free stock when you do sign up. It's not an options platform. It's a stock platform, just so you know. But no payment for order flow, no market makers. I think they are incredibly more transparent than Webull, Robinhood, the whole lot of them. Ding, ding, ding. The casino is closed. I'm really liking this mobile mic. I feel like I could just, so much more mobility, so much more room for activities. The only thing that's limiting me now is like the cord with it, but this is still pretty fun. Pretty fun. Folks, it was a crappy red day, but we also had 3 super cool green days that we all were reveling in. So this is just a little bit of reality. We're getting smacked in the face by reality right now. Remember, when it comes to the market, we have that saying of stairs up, elevator down. It stairs up because people typically buy multiple times, slowly but surely. And then when you end up selling, people kind of panic and sell all at once. So stairs up, multiple buys, elevator down. And it's also kind of on the note of greed is a less of a degree of an emotional driver than fear. Greed is strong, but typically fear is more strong. So this is probably 2 of the reasons why we actually have that saying, stairs up, elevator down. Things tend to go up slowly and come down very, very quickly. So I hope maybe that makes some sense to someone listening right now. But yes, today, not the best day. The market down 0.68%, Q's down 1.5%, IWM down 2.2%, AMC down 8.9%, GME down 10.3%. But as you can see, it is a sea of red. This is not specific to AMC. This is not specific to GME. It is a clear sea of red. Now, you can handle that in multiple ways. Obviously, you could see the red, freak out, throw your hands up in the air and call it manipulation and be pissed off. Or you could sit there, take it for what it is, accept it for reality, and understand that you can use this. Some people's red is other people's green. If you learn how to spot these circumstances, learn how to play puts, you could buy puts, you could do a put debit spread, you could do a call credit spread, you could sell calls, you can have capital on the sidelines and buy the dips. It's opportunity. When I see an entire bloodbath such as this one, yeah, some people are going to be pissed off and they're going to go on social media tonight and their one explanation is going to be like manipulation, manipulation, manipulation. Okay, if you do that, do you feel any better? Did that get you anywhere? Did that help you fight said manipulation? Did that help make your account any more green? The answer is a resounding no. So with it, we got to be technically accurate. When you see manipulation, don't just say manipulation, point it out, have the resources, have the data, know what you're talking about. Beyond that, just generically, if you're not here for the battle of manipulation, when you see red like this, that money-making opportunity. Whenever you see volatility, whether to the upside or the downside, that means it's a considerable money-making opportunity. You just know how to, the trick there is to how to position yourself. You can make money on the upside, on the downside. You can make money, but not as much when things go sideways. But all of it represents opportunity. I don't want people, especially here, if you're in the Moon Gang, to think that like you only make money when things are green. And I definitely don't want you to think you only make money in short squeezes. Are those opportunities to make money? But yeah, actually, very legitimately, today is a day to make money. Today represented opportunity. And if you didn't take advantage of it, I don't want you to be beating yourself up. It's just, you should be intrigued and be like, oh, okay, if it was opportunity, what is that opportunity? How do I spot it? How do I play it? What's the risk profile look like? What are the indicators? What are the fundamental indicators? What are the technical indicators? What news sources should I be paying attention to? I think there's people, when you run into, I guess, problems like this, brick walls like this, there's two types of people. One type is going to be eager. They're like, oh, that's interesting. How can I be better the next time? Always trying to look for incremental improvement. And then the other type of person is just going to complain and blame it on like some other entity of why they have a lack of success. And it's up to us. It's up to you individually of which one do you want to be in. Obviously, I hope all of you kind of pick the former case of being intrigued. How do you spot this stuff? How do you play it? How do you properly manage your risks that days like this don't make you feel potentially the emotional way that you're feeling right now? Because whenever you're feeling emotional, you know that's probably not your best decision to be making, like financial changes, decisions, choices, anything along those lines. See this exactly for what it is. See it as an opportunity. Folks, the market is closed. That's it for today. I will be doing an update video for all of you. That'll be coming out in a little bit on the main channel. So if you're on Twitch, you're going to have to either go to Rumble or Twitch. If you're on Rumble, it'll be on Rumble. It'll be on YouTube. Watch it wherever you want. And then I'll be streaming tomorrow, 9 a.m., bright and early. We're going to close the week out together. I will be there. I'll be getting up with all the farmers and tradesmen. Crack of dawn, 9 a.m. We will be streaming. As always, I truly appreciate your support. All of you watching right now are the exact reason why I get to do this type of stuff. I love this family. I love the Moon Gang. I love all of you crazy apes. As always, from me and Cher, best of luck in the markets.